Insurance agents from around the world, welcome to the Insurance Guys podcast, powered by Glovebox. God, I love Glovebox. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama. Parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
Nailed it.
Did it.
You
Last
nailed
time
it.
Bradley had to do the intro. Guys, I got breaking news today. My beautiful wife is with me down in Mobile, Alabama. She is in the podcast studio right now. We drove down yesterday, and at one point last night, without getting into too much detail, I have not said this to her. A lot of things I don't say, so I can wait and say them on the podcast. But she is my best friend. She has been so supportive in my career. Any success I've had is directly attributed to her and the support that she gives me. But last night, at one point, I am laying in bed. Tennessee Titans were playing the Chiefs last night. They did.
Okay.
They did. No, Chiefs won. I'm sorry. Chiefs won. Very end. I think what you're about to hear is going to probably let you know why I don't know that. At one point, I'm laying in bed, and I thought, this is the happiest day of my life today. That's how good it was last night, ladies and gentlemen. So without going into detail, I'll just leave it at that. So I have purposefully, breaking news right now, for 2 weeks, my wife has said to me, I need your list for what you want for Christmas. And so today, ladies and gentlemen, we have a very special guest on our podcast, and this is a very special day to have her in studio with us right now. I wanted Bradley to go ahead while we're live on air in front of our rock star guest, who is a brother from another mother, and give my wife my Christmas list live on the podcast.
Okay.
So here we go. Baby girl, are you ready for this?
She's getting her phone out.
Here we go. Item number 1 for Scott for his Christmas list. There's only 4 items on here, by the way, ladies and gentlemen. This will not take long. Car cover for my 66 Dodge Charger.
You have a 66 Dodge Charger?
I do. And my grandfather left it to me in 1994, and it desperately needs a new car cover on it. So there's number 1 on my list of what I want for Christmas from Santa Claus. Number 2, 2 pairs of Champion gray sweatpants. So that's number 2 on the list. If she needs to be taking notes over there, Bradley.
She's videoing you. So.
Number three, 1 can of silicone WD-40. I almost couldn't read my own notes there. 1 can of silicone WD-40. That's number 3. Number 4, 1 dark brown pair of Georgia boots, which I don't know where my other pair went, but I would like another pair. And this is kind of a 4.
Like she didn't like that one as much.
Okay, I'm sorry. And number 4B is 3 pairs of boot socks. And ladies and gentlemen, you just got Scott Howell's Christmas list
There's
for the year.
nothing worse than putting boots on without boot socks.
I'm telling you.
So you understand that some insurance vendor is going to send you a Dodge Charger cover branded to their company, right? Or at best, some Champion sweatpants.
If they want to send me, I love Champion sweatpants.
Laurel got some Patagonia jogger sweatpants the other day, and I was like, I'm going to end up wearing those things because they're too big for her, or I'm going to order me some. Right.
No, that is a very detailed list of Scott's Christmas list. I know some of you out there will be amazed at the level of intricacy and the expense that my wife is going to have to go through to get all that for me. But hopefully we can scrounge up enough money to get those 4B items there. Hopefully
you know what you should do?
Huh?
We were talking about.
And by the way, I swear to God, that's it.
He actually wrote a list. Yeah.
This is it. This is my Christmas list. This is my real, honest to God Christmas list.
So, you know what you should do? You know, it'd be hilarious. This would be right up your alley. We were talking about agency swag before we came on the air.
Right.
You should get, you know, the juicy pants that people used to wear like 10 years ago with juicy on the butt.
Right.
You should get that with I Protect on the butt.
For me to wear or for her to wear?
For you.
I would love that. You know, I'd wear the shit out of them. She would. I bet you she'd wear them. That'd be a great gift to give the girls in the office too.
You might be running into an EPLI claim.
Yeah, EPLI claim. Hey guys, listen to me. Our mission on this podcast never changes. It is to help you insurance agents each and every week, and to help you row that boat one step closer to the lighthouse, to help you live the life that you deserve to live, and to get the kind of high-end Christmas presents that I'm going to get this year at my house. And that's what I want for each and every one of you. Now, I don't know if y'all can afford a can of the WD-40 silicone. Remember, I said that silicone spray, but that's big doings around my house. So I want to bring on somebody today that I feel a connection with. He is a brother from another mother. He is a fantastic insurance agent. He's one of those guys that's really easy to like. People genuinely like him. He's fun to be around. He's fun to enjoy an adult beverage with. But without further ado, I want to give him the introduction that he has always deserved. He was born, raised, and lives in San Diego, California, one of my favorite cities in the world. He is married to the beautiful Desiree Farmer, and they have two beautiful babies, Peyton, 18, and Olivia, 12. Peyton and Olivia, one of these days, you are going to listen to this podcast, and you're going to listen to your daddy and what all he's accomplished in his life, and you are going to be so proud of him. So proud of him, and you should be proud of what he's accomplished. He's a graduate of San Diego State with a Bachelor of Science degree in accounting. And in 1996, he started a scratch farmers agency. He has achieved President's Council twice, was a member of the Agent Commercial Council, outside of farmers, was a member of the $1 Million Roundtable. In 2013, he started a niche in private flood, and 2 years later, he hustled into Lloyd's and eventually was tribunalized and became a Lloyd's cover holder. That word's too big for a boy from Pine Ridge, Alabama. He brought on a partner to help run that business while he continued at Farmers. And in 2019, he started his own independent insurance agency focusing on property and casualty and flood insurance. Ladies and gentlemen, it is my profound honor today to introduce to you my friend and great American, Mr. Aaron Farmer. How are you, Aaron?
I'm doing great. Thank you, Scott.
It's not often that we interview someone that has the same mic as us on the other end of the world.
That's right.
He knows what he's doing. That man knows what he's doing.
Man knows what he's doing. Aaron Farmer, let's get in my DeLorean today. We've got a lot to talk about, and I've got a lot of questions for you. Get in my DeLorean today. Now, this is two big old boys in a DeLorean, but I need you to get in here with me. Go back in time. Talk about how you got into the insurance industry, and you had a lot of stuff in here you need to touch on and bring us up to today.
Okay, I'll try and go as quick as possible. So, I graduated from San Diego State, and I moved to Newport Beach, California, and I was working for an accounting firm that did business valuation. So mostly people getting divorced, things of that nature, and you'd value their estate or businesses. And I knew I wanted to own a business, but of course I had no money. And so at one point we were called in to value a brokerage. So this guy was getting divorced and we were working for the wife. And so we had to value this brokerage. And I had no idea really much about insurance. And so as I learned more about the business, I started saying, hey man, this is pretty cool. And ultimately, certainly the guy made good income. I like that, but he had a lot of time for his family, you know, and that really struck with me. And at the end of this deal, I said, I just knew what I wanted to do. I wanted to be an insurance agent. So I started looking around, calling on ads, and I ended up going back to San Diego and answering an ad to a district manager, someone I actually had met years and years before with Farmers. And they called me down, and of course, American dream. So you can start a business. I had no money.
Right.
So anyway, that's
Been there, done
that's how
that.
it started.
Yeah. Talk to me a little bit about your transition from farmers, and then I want you and Bradley to talk a little bit about your relationship with Lloyd's as well. But before we get to that, what has been the biggest challenge for you relative to moving from more of a captive farmer's mindset back, for a number of years, and now the past few years getting into more of the independent side of the house, and how that's just different?
Yeah, no, it's a good question. I think I was lucky because early on, when I first started in California, we had the Northridge earthquake, if you remember that back
Right.
then. So, of course, I started when I think there was a freeze, moratorium on home, so you couldn't bundle home and auto, and things were tough. So I learned, cut my teeth, I would just say, on like E&S commercial, believe it or
Right.
not.
Right.
And so you start learning kind of those, people are bringing you these wacky deals, uh, you know, just crazy. Oh, I need a liability policy for some just weird thing that's never going to go anywhere. So that's how I learned. And later sort of actually acted as if I was an independent agent in some respect, having agency management system because we did a lot of commercial. So, but I was lucky because about 8 years before I left, I had started writing some private flood insurance, and was doing some pay-per-click. I got into pay-per-click in Google,
Right.
and basically we got to a point where we were writing a lot of business, and I decided, hey, why are we going through wholesalers? We should be doing this ourselves. I contacted Lloyd's, and it took a long time, but we became a cover holder, and farmers had a big problem with that for a lot of reasons.
So you were a cover holder before you left farmers?
Uh, I guess I could say that now because I'm gone.
I didn't know that. That's interesting.
Well, he brings up a
Most farmers agents probably don't even know what that is.
No, they don't. Well, I don't think farmers knew what it was. And
right.
I think, to be fair,
Man's running his own insurance
But
carrier.
but Aaron, let me stop you right there. Bradley brings up a good point, but you said something earlier that caught my attention, and I want to go back to it. And this rolls into him being a cover holder while he was still at Farmers. Farmers is a captive carrier, obviously, but the most successful Farmers agents that I have ever met have that blend of, and this is me on the outside looking in, I've never been a Farmers agent, but it seems like they all have this blend of they've got some Farmers business, but then a hell of a lot more
Kind of like
broker.
Nationwide when you were with Nationwide.
Nationwide was the majority. I would say 90% of what we had at that time was Nationwide. But Farmers agents seem to do a lot of that blend. And then you mentioned like the AMS system and the CRM. Like, if you've got a bunch of excess and surplus line stuff outside your Farmers book, I assume you've got to put that somewhere relative to an AMS or CRM system just to keep up with it. Otherwise, you'd be like lost, I bet you that happens quite frequently with them.
Yeah, well, I've been gone for a while, and they've all had a few different contracts, right? So
Yeah.
they used to talk about the quote old contract.
Right.
So I had the old contract, and it was pretty simple. It was just the first right of refusal. So if it's something that they didn't offer, then you were allowed to go outside and procure it outside. And that really was sort of the deal. Now, when it came to the flood insurance, quite frankly, I think it's just it was so in its infancy that I think that no one really knew what private flood was. And I think they thought that there might be a real problem on their hands because, some agents, in fact, this is how crazy, I'll make it as quick as I can. I literally had gotten a call from, I'm in San Diego. There's a guy in San Francisco, and I was getting him a flood quote, and I said, hey, do you want homeowners insurance too? And he said, no, I'm happy. Okay. A couple of days later, I got a call from a farmer's agent around the corner in San Diego, called me, yelling at me, saying, hey, you stole my customer. I said, and I know him, he's a friend. I said, what are you talking about? I would never steal your customer. Oh, yeah. I said something, flood insurance, private, no such thing. And I think, and then he called Farmers, and I think they said, "Oh God, we're gonna have a problem on our hands," because they didn't offer it, and
That's
so,
where something like that comes back to bite you. It's not corporate. It's other agents turning you in. That's where that's how that happens.
Then there's a problem.
Yeah.
Yeah.
Yeah, well, and you listen, in full transparency, so Farmers called and they said, hey, they wanted to come in and talk, and I said, sure, and I had my contract out, and they said, so this is what you're doing? I said, 100%. Here's my contract. It was one page, by the way, one page contract. I said, you got to show me here where it says I'm doing something wrong. I don't feel like I'm doing anything wrong. In fact, the play really was never about the flood. It was about finding another way to get home and auto.
Right.
So I thought this was a good thing. And anyway, they just said, well, we'd really appreciate it if you just didn't do it. And I said, well, okay. And I had a pretty good Farmers thing going. I didn't want to, get rid of it. So that's why I brought on a partner. We started another business, and it kind of went over there. And I stayed with Farmers for a couple more years.
You rascal, you! I didn't know that.
So something that Bradley and I seem to be wildly interested in relative to your time in service is this relationship that you developed with Lloyd's as a cover holder. And kind of talk to us a little bit about how that came about relative to the process that you went through to make that happen. And then I also want you and Bradley also today to talk a little bit about this new pet insurance product that I think, best I can tell, the two of you kind of spearheaded to get to where it is today, because there was an issue for all agents out there relative to pet insurance and not getting any commission, and some carriers wouldn't let you sell it. You guys found a problem and you solved it. So I want to talk about that too. But how did that first first few months when you're trying to get over there to talk to Lloyd's of London, how'd that go? What was that like?
Yeah, well, the first call, I got the phone basically slammed in my face. So we got to a point where we were writing, the premiums are fairly small, and we were writing quite a bit though. And I had seen something in the insurance journal, and it was something they were having in Philadelphia, and it was called Chart, I think the name it was. And it was getting some Lloyd's underwriters and people here to talk, and I had seen it, but I just missed it. So I called it's called the Lloyd's correspondent. They have a couple throughout the country, and there's one like on the West Coast and their job is to promote Lloyd's everywhere to help educate and whatnot. So I called this guy and I said, hey, I got this flood deal. And he said, yeah, click. And I said, oh shit. So I said, okay, it's on, bro. It is on.
It probably makes it like 10 times worse that he had a British accent too. Yeah. Like, you stupid American. Like,
yeah, you could see him dressed in like 18th century.
Yeah,
exactly.
You just remind him who's 1-0.
Right.
Just remind him of that. James is going to listen to this and be like, "These."
Yeah. No, it's funny. So yeah, no, look, we're all hungry, right? We're all in the hustle, and I just didn't like the way that went down. So I just started making some calls, and we eventually got to someone out there. One thing to deal with Lloyd's, you have to have a Lloyd's broker. So there is a middleman. You cannot go directly to a syndicate. And I met this guy. We had a couple calls. He liked what he heard. Next thing you know, he's flying out to California. And that really started the process. And ultimately, I had a lot of people tell me, hey, they're never going to talk to you. And I did wonder, why would you talk to me? We're tiny, right? We're small. Let's be honest here. We're not giant. We're small. But what they really said is two things. One, they want experts. They want an expert. And the second thing is, they say, we don't care how much money you make us, just don't lose this money. Don't lose this money.
Well, and to add a little bit of clarification, so Lloyd's cover holder, it basically gives you the ability to underwrite on behalf of Lloyd's, correct?
Essentially, yes. There's two ways at Lloyd's. There's two real ways to do it.
Yeah, go into that a little bit, because I think a lot of agents don't know.
Yeah, so you can to access Lloyd's. There's something called the open market. So an open market risk would basically be, let's say you've got some gigantic risk in Alabama. I don't know. It's massive.
We had
but
one
it's
recently.
okay, and let's say it's got some hair on it. It's got some claims. It's got, who knows? You would take this massive risk. There's got to be a lot of premium behind it. And then they walk in that Lloyd's building, theoretically, right? And then they walk to each of these desks and say, "Do you want a piece of this?" Let's think Titanic, right? Do you
Yep.
want some of this? And they go, "Yeah, okay, I'll take 10%. 10%. Maybe it's a shopping mall. $30 million risk. I don't know. And then you get 10 people to take percentages, and that's it. And then they come up with a premium. Here it is, 250 grand. Can you sell it? That's open market.
And that's
a
that's
one-off.
very close to how Lloyd's originated.
Correct.
Right. So back in the day, Lloyd's, and I don't mean to interrupt you, I think this is
No, go
important.
ahead.
So back in the day, the way Lloyd's got started is they would insure ships. And the way that worked, correct me if I'm wrong, Aaron, there would be a piece of paper, like a scroll, in a bar in London, and you would write your name. They would have the info on the ship, what it was hauling, where it was going, that sort of thing. You would write your name and say what percentage of that risk you wanted to take.
That's right.
And you would write your name under the person above you. That's where the name underwriter came from.
I'll be dang.
And so if you guys have had any kind of crazy risk that Lloyd's insured, if you look on the deck page usually or somewhere in the policy, it'll have the names of each syndicate, and a lot of times acronyms, right, Aaron? It'll have the names of each syndicate and a percentage beside it, and that's the percentage they took. We had one recently where it was an HOA here at the beach that nobody wanted, and they had like $1 million claim after Sally, and Natasha at my office basically like wrote up an email case as to why, even though despite this stuff, this is a good risk and we should help these people out, this condo owners association. And they literally took that on the Lloyd's floor and said how much, and shopped that around and got it done. So that is, what did you call it?
That's an open market
Open
risk.
market. Okay.
Yeah.
And so the other is
Delegated authority. And so they delegate authority to you. You know, it's just like an underwriting rules, like any standard carrier says, you know.
so they give you
tell
so
what-
much and say you can do this much basically.
Which, right. So you would work with them and say, hey, I want to write this kind of risk with these characteristics, homes that are, you know, this age group and at this price, and they agree to it. And then what they do is they back you, right? It's their money if there's a claim. That's kind of how, that's ultimately how it works. And I'll put this perspective, because I think, and then if we don't move on, we'll go in this rabbit hole forever. But let me put in this perspective. I think this really, and they do a great job of keeping this gray mystical thing about Lloyd's, right? I mean, everyone even here still
They do.
thinks,
It's like the Illuminati.
they just do that, and I don't know why, but they do a great job of it. I don't think it's intentional, by the way, but it just works that way. Lloyd's is not an insurance company. Lloyd's is a marketplace.
Correct.
So, but let's put it in this perspective. It's like I'm an insurance company, Scott's an insurance company, and Bradley's an insurance company. And all three of us, we work independently, but we all work together.
Mm-hmm.
So, as an example, Bradley, you want to grow your business, and maybe you want to do homeowners in Alabama. Scott wants to do homeowner associations. I think you do that now, right? So you're doing home, you know, habitational, let's just say.
Right.
That's what you want to do, and I want to do flood. Okay. So we all want to do as best we can for our own businesses, but collectively together, we are also sort of one. So we don't want Scott to have problems, because that creates a problem for all of us.
So that's why you'll see like Amwins has an office on the Lloyd's trading floor, or Hiscox, or Canopius. You'll see these right? I'm asking like that. That's why you'll see each carrier there, essentially.
Well, so there's a bunch of syndicates. So all these syndicates make up the Lloyd's marketplace, right? Because they all have different appetites. I think sometimes people they'll just say Lloyd's, blanket statement. Well, Lloyd's won't do this. Well, that's just kind of not true. Like Scott, again, he may not do it because he doesn't know anything about homeowners. He knows about habitational. That's why he doesn't do it. But there's an overseer, a group that says, okay, it's like let's say the NFL. They're going to appoint, who's the guy who's in charge of the NFL? I can't think of his name.
Roger Goodell.
Roger Goodell. Why do they hire him? Well, to make sure that the brand right now we got the Commanders, right? That guy Dan Snyder, he's going kind of crazy over there. So they don't want him to create a problem for all of them.
Right.
That's really the same thing.
Is that why Jay-Z is supposed to buy the Commodores?
Oh, I don't know anything about that. So to both of you and to the Lloyd's marketplace, I'd like to say this. I can appreciate what they have created relative to a risk marketplace, and I can appreciate both their longevity and how they're able to spread risk out. But personally, I really liked it better before Lloyd's, where if I was going to have you take a shipment of tea for me across the ocean to, say, Central America, I would just literally tell you, if I don't get my gold and silver back, I am going to cut everybody's head off that you know back here.
That's probably how they did it back in the day.
I know it's how they did it. I like that situation a lot better than spreading risk out. Let's just kill every single person that you have ever known your whole
Put their
life.
head on a spike.
If I don't get my money when you come back. That's kind of how Lloyd's was created. Was before then, it was pretty much Game of Thrones.
And yeah.
That is absolutely the funniest thing I think I've ever said.
That's a great analogy. It's
That
But this is we're going to clip this. This is going to be how Scott would run an insurance
Lloyd's,
company.
this is how I would do it. Okay, we're going to cut every person that you've ever known since kindergarten's head off if you don't get us our money back. That's how it needs to be done.
Aaron can't see me, but
That's the way it was
just laid back in my chair.
That was the way it was done in 1327 over there.
I don't like. I'm not a Game of Thrones fan, and I don't like any medieval movies because they're over the top brutal like that.
Right.
But that's probably how they really were back then.
Oh, 100%.
So
yeah, hey, I tell you what, let the king give you a bunch of stuff to put on a ship and go to somewhere like South America, and don't come back with what you're supposed to come back with.
Exactly.
See how that works for you.
So it's like this is a longer podcast for another day, but I do want to point out that because Scott and I provide more value than anybody else in the insurance industry, are people who attended the One City World Tour, the listeners of this episode who attended the 2022 One City World Tour, got a full-fledged synopsis of Lloyd's from Mr. Aaron Farmer here.
Correct.
Because that's the kind of value we provide to people when they come to our events. So if you're listening to this and want to possibly consider attending the One City World Tour in 2023, January 18th, 19th, Austin, Texas. And I would argue that the version of the presentation that Mr. Aaron Farmer gave for 2023 is the guy that created the first insurance blockchain. And he's going to teach you how to do it too. So if you want to attend the One City World Tour, go to onecityworldtour.com. We've got to promote that, guys. You guys need to come. We're only selling 200 tickets. When we get to 200, nobody else is coming.
So, Bradley, and you guys need to come to the One City World Tour. Go buy your ticket.
We have not done a great job of promoting because I don't like selling to our audience, so I wanted to bring that up.
But it sounds like Bradley, through Aaron, has kind of figured out you had a risk that you mentioned earlier that you promoted, I guess would be the best way to describe it, through the open market at Lloyd's. So you've kind of figured this out.
No, not necessarily. No, I didn't do anything different with that particular. We went to a cover holder who went to a broker who went to Lloyd's.
Understood.
We didn't do anything different because of my relationship with Aaron. I understood what actually happened.
Right.
A lot better.
Can anybody go to a cover holder? If I had a risk that was, $30-40 million risk, and I needed to go, Could any agent listening to this?
Well, there's a lot of cover holders out there, like Appalachian Underwriter's a cover holder.
Okay.
Can you be a cover holder, I think, is what you're asking.
How do you do that?
Well, everybody who is a cover holder has some kind of crazy-ass story of how they became a cover holder. I don't know. Maybe Aaron can answer that.
Aaron, can you answer that?
Yeah, that's a good question. I think there's about 800 in the United States. I mean, from Amwins down to me, but yeah, I think it depends. It depends on the market time. I mean, right now,
Hmm.
for example, I understand that they're not trying to appoint
Yeah.
people.
Huge surprise.
It's yeah, well, what they would just
Nobody
say
in
is
insurance has heard that this year.
Nobody.
exactly. But I think the idea is that it's a. I'll just tell you what, man. It's a long process. It's like 18 months of
Yeah.
it's crazy. It's just a long time to get to the thing where what they would say now is just go to a cover holder that's already
Existing
existing
cover
and,
holder.
and you could work out something. So
If I went and camped out in their lobby for like 2 or 3 months, and like just stayed with a buddy of mine that lives in London, and I just camped out in their lobby for months and months and months at a time, would they appoint me just to get rid of me at some point, or how would that? Now I do know
we
that
could do that. We could do that and film it.
security will kick you out if you do not have a suit and tie on. Is that
I
correct?
believe so.
I believe that's right. Don't you have to have a suit and tie on or a coat on when you go in or something?
absolutely. Yep.
That's what I thought.
Got to have a suit and tie. Well, the thing is, like, it depends on when the marketplace is, right? So for these guys, as an example, when they're having claims and they're like companies right now in California, they don't want business, right? I mean, we had
Right.
our travelers rep say, "Don't write an auto policy for the next 30 days. Just don't."
100%.
Right. So in
Well, they don't
Lloyd's, and
deserve it
when it's a
anyway.
similar time situation when they're not, then they have restrictions, right? So they don't
Yeah.
want sometimes new business. When they do, and you're talking investment money, right? So there's investment dollars comes into these syndicates.
Right.
They have this money and they say, make us more money. So what does
Yeah.
that mean? Well, that means they got to start programs and they got to get
Sure.
policies and start, and other times they're like, chill. So
But
Sorry, go ahead.
But the syndicates that are inside the Lloyd's building, does each syndicate have a specialty to some degree where this one likes whatever that risk is, and this one likes that? And is it like that, or are they just all over the board?
yeah, I would say generally they all have a certain flavor, property, versus casualty. I mean, it's
Sure.
really cool. You go in there, some do political risk, some do terrorism,
Right.
some do, all the marine, they ring the bell when something really bad happens. So they have this bell in there, you've seen the picture of the bell.
Mm-hmm.
So that bell came from a ship that sank. So if they ring the bell in the building, everyone freezes.
So
'cause
that's
that
not a
means-
good occasion when the bell rings.
That means shit's going real bad.
When was the last time it
And then
rang?
I don't know, but then they write in the book. They have a book, right? They write the big loss in there, and they have all those from like 1700. I mean,
Wow.
they have every loss written. In
It'll
that
have
place.
you.
It's-
It'll have you thinking different about insurance too. So I called Aaron one time. I had the best idea ever.
Sure.
Personalumbrella.com.
Done.
They suck.
Go get it.
Their UI UX is terrible. Agents hate it. There's not another standalone umbrella option for
Aaron-
agents out there. And I called Aaron and I said,
Aaron, go figure it out.
I have the best idea ever. We're going to create an insure tech for umbrellas.
Perfect. What's the downside? What's wrong with that?
Right. And what happens, and Aaron and I think I could speak for Aaron as well, don't know a ton about that in terms of being a cover holder for that. But when you become a cover holder, they will give you a certain aggregate of business that you can write.
Sure.
And Aaron says, okay. He's messing with me a little bit.
Yeah.
He says, okay. He's like, you get $100 million aggregate. That's a lot. You just wrote 100 umbrellas. Mm-hmm. Umbrellas are $350.
Right.
You just wrote $35,000 in premium.
Juice isn't worth the squeeze.
Congratulations. Exactly. And I was like, now I know why personalumbrella.com is the only umbrella company.
Disregard.
standalone umbrellas. I was like,
Disregard. Don't take that to them, Aaron,
I
please.
will hang up and listen. But to transition, to segue, Aaron. So
Yes.
when you're in the business like all of us are that are listening to this, Scott, I, Aaron, even Scott's lovely wife, Kim,
All of our listeners.
you notice opportunities in the market.
Sure.
And Aaron noticed an opportunity in the market, got Scott and I into the fold. So talk a little bit about our latest project, Aaron.
Yeah, exactly. Top Dog Pet Insurance. Well, look, I listen to you guys, and I love what you put out, by the way. And I listen there's a lot of reasons, but a lot of it is the technology pieces, right? we talk about embedded insurance a lot,
Oh.
and I know that means APIs. We talk about what does that all mean, and but I think from an agent's perspective, there's a right time right now. The market's hardening. Carriers don't want business. Rates are going up, and here comes this pet insurance. Well, pet insurance right now, to me, my perspective, it's kind of clunky out there. Meaning, I have a policy. I guess I could say it with Safeco, and I'll just say I have no issue with Safeco. By the way, the policy's fine.
I do, but
There's no problem with it, but I don't know really how to access it, and quoting it's kind of, I have no idea. But here's the other deal.
Well, I'm sure the way as good as Safeco's technology is, the pet product's really, really good. I'm being facetious.
During the pandemic, people, from my understanding, people weren't dating, they weren't getting married, they were buying pets, right? Because you couldn't see anybody. So there are $2 billion a year being spent on pet insurance. And I talked to some agents. In fact, I talked to this one agent. This is great. I talked to an agent who I saw on Facebook has pets, has some automation business, goes to the things we go to, IOA meetings. And so I called this person randomly. They had no idea who I was. I just said, "Hey, I want to tell you about this thing I got. It's called pet insurance. Would you be interested?" And they'd be like, I don't really sell a lot of pet insurance. And it just struck me like, kind of hit you over the head moment. That's like, okay, you don't sell pet insurance. So they don't buy it from you. And the customers aren't buying it from me, but they're spending $2 billion. So where are they buying it? Well, let me tell you, Lemonade, a Figo, Costco just got in bed with them. You don't think that those companies, your customers, are buying it online? They don't tell you about it because you're not.
And guess what? They're remarketing to your customers for auto, home, life insurance, commercial insurance, workers' comp, all that.
Sure,
100%. So anyway, we got this. So here's a opportunity. It's a quote bind issue. I mean, really, we say it can happen in 3 minutes? It's super easy. Agents get a unique link. They can give it to their customers. They can put it on their website. It's agnostic in the sense that this company doesn't sell home. They don't sell any other product.
Branded to you.
What's that?
Branded to your agency, right?
Yeah, you can brand it. They're not going to. You don't have to worry about someone coming in and trying to sell any other product.
And you don't really have to service it.
There's no service.
Yeah. So my take on it. So when Aaron started talking about this and wanting me and Scott to be involved, I'm not a big pet guy. I had dogs growing up. Could take them or leave them. It's not super popular in Alabama, I don't think.
yeah,
But I started poking around to other agents in other parts of the country, New England area, California, Idaho, and it's just like a real thing. Like like agents were trying to sell, and there's really two areas we had to solve for. Okay, Aaron, correct me if I'm wrong. One is, like you said, all of the products out there were super clunky, really hard to sell. If I've got to, I look at this as an ancillary product, right? For me and my agency, we're so focused on the things that make us money that for us to add an ancillary product that takes any work is just out of the question.
Yeah,
it's got to be super easy, like some of the, like a zip bonds where you can just send them the link and the customer can buy the bond, right? So if the customer can do it themselves, you can just add it to your, say, onboarding or your renewal process. Why wouldn't you take that extra mailbox money, right? So there's number one. And number two, a lot of the commissions out there were really, really, really low.
right.
So essentially, we had to solve for those two things, and we've got great commissions, and it's super easy. Like Aaron said, it's a link you can include in your customer onboarding. Hey, do you have a pet? Or you can even filter for the people that you already know they have a pet,
Right.
and the customer buys it. That's it. It's super easy.
What is the commissions on this? Because I'm thinking like all these agents out there right now. What do they make on a commission on percentage wise?
10 and 10, right, Aaron?
10 and 10?
Yeah, it's 10% new, 10% renewal. Check it out.
And you don't have to do anything.
You really, you don't do anything, and you're going to get paid. I mean, agents should be, your customer, put it this way, in terms of the customer. So right now, your customer calling and take your VA time or your staff time for an hour, about $4 on their auto premium, right? And bitch and moan all that. But they love their pet. They love their pet. I mean, my wife, I can tell you right now, if she had to choose between our dog and me, she's choosing our dog. The people love their pet. Our premium is about $85 a month with Top Dog Pet Insurance for a decent plan, right? I mean, it's $960 a year, and it's high 95 retention rate.
And you insulate that client from a freaking lemonade going after them for their other stuff.
Right.
100%. I mean, no one's going to get rich off this. I think the agent needs to open their mind. It's not about the pet insurance, right?
Yeah.
It's not about, I mean, yeah, it's great to have some extra, but there's going to be an agent. In fact, maybe Bradley, you can promise that we find someone, we can bring them back on a podcast and showcase them. But someone's going to go out there to a vet and do a lunch and learn, spend $60, tell the staff about why this is great, get 4 or 5 people that they did not have in their agency before, just got the pet policy, put them in their automation, whether it's agency Zoom, better agency, take your pick.
Right.
Insured Mind. They're going to cross-sell them a home and auto. Then they're going to find out that the guy or woman's got a business, get a workers' comp, maybe drop a $2 million life policy, and then say, this is what we're supposed to do in insurance. Right,
Correct.
guys? I mean,
Yep.
I said, what am I missing here?
That's exactly right.
Well, see, here's what I want to do. I'm going to go ahead and just talk about this in front of God and country. Aaron and I have not figured out how to do this yet, but this is what I want to do. And we're early. We haven't necessarily launched yet. We're doing pre-appointments now. What's it? topdogpetinsurance.com/agents with an S on the end, I think.
Yes.
And that'll be in the show notes. But here's what I want to do.
House to house, spade and neutering agents' pets for them.
No. Here's what I want to do.
Never mind.
Here's what I want to figure out. And I think Aaron knows what I'm about to say. Let's say we appoint Chris Green's insurance agency.
Okay.
Chris Green sells a pet product,
Okay.
right? Or his automation sells a pet product. That customer that bought that pet product for their dog, Sparky,
Sure.
gets a small package in the mail a week later addressed to Sparky with something in there that is a dog toy branded to Chris Green's agency.
Unbelievable.
And I want to figure out a way to do that. And I'm obsessed with figuring out this. That's not me. I wanted to have it ready by today, and I haven't quite figured it out yet. But I didn't want to pass this opportunity up. But like Aaron and I and Scott are thinking about, like, I love that. If a carrier did that, I love that, right?
Yeah.
We want to find ways that we can provide value to agents above and beyond just giving them a pet product to sell.
And that's exactly what you've done, because Aaron's right. It's not about the pet insurance. It's about using that in a number of different ways to create interest, to spark conversations, to get other business in the door.
Yep.
And not to mention the fact that from a current client standpoint, it's just another value add for them that you can send them and say, hey, if you love your animal, we got a great pet product. Here it is. Boom, bam, boom. They're signed up and it's done.
And we have a ton of agents that have already shown interest, right, Aaron? And I want to acknowledge Aaron. He's been working his butt off behind the scenes trying to get everybody login credentials and all that. So I say that to say we're not going to be appointing everybody under the sun. So if you want to get in, go ahead and fill that out now. Don't wait.
Right.
Because there'll come to a point to where it's saturated.
Agreed.
Yeah. No, thanks. And thanks for your help too. I think the way I see it, look, I've been an agent 23, 24 years, and I've seen a lot of stuff. And I just think that this is a great time for this product in this market right now for agents. It's simple. It doesn't take staff time. There's no service, and you get good commission. And yet agents, we go to these conferences and we want to see people stand up on stage that have these big agencies and make a lot of money. And here's a couple agents here, we got some good agencies, and we're telling you, this is what you do. So agents should be listening to say, yeah, that's a good idea.
Right.
Put it in your automation. Someone's going to knock it out of the park with some big policies based on this. It's no different than the boat insurance or, all the ancillary products that are, you got to round out the the product out, the product line with your customer, right?
So
When everybody knows each product you add improves that retention by a couple years.
So what you guys don't know that I find to be very interesting relative to this product is we have at my house Nash, the English Bulldog.
He's
And
not spoiled at all.
not at all. And Nash is 4 years old, and from a pet insurance perspective, he's probably because they have so many health problems, they're like the worst risk, right, for dogs. I want to say, Bradley, I'm almost embarrassed to say this, but I think we pay Nationwide's. I'm obviously going to switch it if I can. I know there's some limitations relative to age with pet insurance too. Like you don't want to insure a dog that's 14 years old and about to die, I'm sure, but I want to say we pay about $200 a month for his pet insurance. It's a lot of money. It's not cheap.
Well, you're going to be moving that over to Top Dog.
So I mean, it's
Well, the dog. I've seen videos of the dog. He clearly has asthma or some kind of
Well, I mean, he's an English bulldog.
some kind of respiratory like.
Oh, he's disgusting. He's absolutely disgusting.
Yeah. Well, it's good that
Does
you
he
have
still
it.
not move from that one spot?
He'll sit there for 8-10 hours at a time. And the
I've
older
heard some
and-
agents. I've heard some agents say, "Well," or just some people say, "Yeah, I don't know, about the health insurance thing." But it's funny because if you take Scott, like your wife, and let's say you didn't have the pet insurance, but here's the deal: let's say your dog, who I'm sure your family loves and your wife loves, and you come home or it's dog sick, and you go in there to that vet, and that vet says says the C word.
right.
I guarantee.
Yep.
And that vet says, "I hate to tell you, but Nash has got cancer."
Right.
But I think we got it in time, but it's going to be about $9,000.
Correct.
You think your wife? You just going to say, "Well, sorry, Nash, it's been great knowing you." Hell no. There's not. Your wife will move heaven and earth
Yep.
to get that treatment started tomorrow. That's so. Get the pet insurance.
Yeah, I've heard stories like that where people pay $10, $20, $30, $40,000 to save Sparky
She
because
just changed her mind about saving him over there. She's shaking her head.
now,
no.
Aaron, I will correct you on one thing. My wife's a little different than most. She would probably not be in that camp, but I know a bunch
Yeah.
of people who would be glad to pay $10,000 to help Sparky live for another couple of years. I know a lot of people like that.
No question.
So-
I mean, look at Instagram today. I'm not the social person that Bradley is, and with all this, but I'm getting into it. But did you see how many pet reels are going today?
Right.
If you look at one, the next thing you know, your whole Instagram account is full of dogs doing stuff. So,
Correct. Yep.
Anyway,
Well, Aaron, thank you so much for being here today. We've got a hard stop right now. I've got to get off of, but I really appreciate you, and I need to call you and just catch up with you one day. If things will slow down for me just a little bit, I'll try to do that. But
And by the way, I'm wearing the most perfect Top Dog Insurance T-shirt right now. If
There
you're
you go.
not watching on YouTube, go subscribe to our YouTube, The Insurance Guys.
There you go.
We're putting more content out there so you can actually watch the episode
Right.
on YouTube. We've got 4 cameras on us right now, so you get every angle.
Just what they want with me.
We're doing everything but following Scott to the bathroom. So
Aaron
guys,
Farmer,
thank you.
we love
You
you.
guys are the best, and you're always invited. I told Bradley. He said he wanted to come out. He's got, Bradley's got ideas. He said, "I got another idea for a Lloyd's deal." He wants to come out. I said, "I live right next to Wild Animal Park. Legoland is. He can get a little baby of his.
Yep.
Make it a business trip, but
There you
keep
go.
the wife happy too." So,
Well, you're the best, brother. We love you very much. And as I end every episode, rewards come from action, not discussion. Get your ass out from behind that desk today. Go out into the big bad world. Make money for your family. Make money for your wife, your husband, your kids' college fund, your parents and your in-laws out there that are struggling. Go make money for them. Write good business for the companies that you represent, and write good business for the agencies that you represent. Bradley Flowers, I love you.
thanks, brother. Thanks, Aaron.
thanks, guys.
Aaron, we love you, brother. Guys, you are listening to the Insurance Guys podcast, and we love each and every one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care.